Hey guys, welcome to the Beginner's Guide to Investing series where we'll talk about how to invest in different sums of money. So in this video, we'll talk about how to invest with just £100. The next video with just £1,000. The following video, how to invest with £10,000. And the final video, how to invest with £100,000. So guys, that's 4 videos including this one. So make sure you guys stay tuned. Also, if you like the sound of this series, then smash that like button and don't forget to subscribe to the channel and hit that bell notification button so you are reminded and notified when future videos come out. With that said, let's now get straight into this video. Right guys, how to invest with just £100. Now, £100 is not a large sum of money, so there's not many things you can invest in. Okay, so the best place to start and the best place where I think you should start is in the stock market. Now, there are many brokers and platforms out there that allow you to invest into the stock market with as little as £1. So it's a great place to start if you're a beginner, if you're new, or if you're not earning that much money and if you've got a small amount of money to invest in. So it's a great place to start. The stock market allows you to get into the markets and get involved and get investing in ways that you couldn't do in other things like housing, for example, or properties, etc. What I'll do now is go through the steps in which you can take to invest your £100 the most efficient way and the best way I possibly can think of. The first step is you want to think about the broker or the platform you're going to use to buy and sell your investments. Okay, so you want to make sure you're not paying any fees or any charges because the amount you're going to invest is so small and you don't want to eat into the profits. For example, you should be going for 0% or 0% commission-free trading platforms, such as Trading 212, one of my personal favorites, and Freetrade. They're both UK-based apps and they're really good, and they both offer 0% commission-free trading. So that means every time you buy or sell a stock, you don't get charged anything. Okay, it's completely free. There are other companies like Hargreaves and Lansdowne who charge £11.95 for every single trade. So every time you buy or sell, you're paying £11.95. Now, with a small amount of money, with just £100, you don't want to be paying that. Okay, right guys, step number 2. So the next thing you want to think about is taking advantage of any promotional offers being provided by these brokers. Okay, so Trading 212 and Freetrade both offer promotional offers when you use them or when you sign up using a referral link. Now, I've got a referral link down in the video description below for Trading 212. If you use that and you invest, okay, you just have to invest, I think, £1 only, and you get a free stock worth up to £100. Okay, so think about it. If you're going to invest £100, you can double your money just straight away just by using this referral link. So make sure you guys take advantage of that. Freetrade offer up to £200 worth of free stock when you invest with them. Okay, so £200 even better. So you can triple your money just by investing with Freetrade. Okay, now I don't have a referral link for them down below because I don't use them. But if you do a quick search on YouTube and just do a Freetrade review on YouTube or something like that, there's loads of UK-based YouTubers who are reviewing this app, and they'll probably offer you a link below because they're probably using it to do the review. So it's so easy to find. Make sure you guys take advantage of that because you're putting in a small amount of money, and it's so awesome just to get free money, free stock. Right. Third step. Now you want to think about what you want to invest in. Now with a small amount like £100, you don't really have the luxury of diversifying your portfolio or buying many different stocks or many different funds, etc. So what you want to do is just go for one stock, either one high growth stock, or you want to go for one really good with a really good dividend yield. Okay, so one high growth or one dividend paying stock. So what do I mean by one high growth stock? So you want to think about companies like technology companies. Those are sort of high growth companies that can potentially double, triple, quadruple in a couple of years or in a few years time. Those are the companies you want to look out for when you want to invest with your money. With dividend paying stocks, there are many dividend paying companies out there here in the UK and in the US, and it's usually big established companies that give you dividends. Okay, so look out for them. There's plenty out there offering really high yields, so it's good to have a dividend paying stock because you can earn income as well as potential growth from the value of your stock. Step number 4, when you can invest more money. Now, there's a common misconception out there when it comes to investing in the stock market, and that is 1, you need a ton of money to invest to make it worth your while, or 2, you need to time the market perfectly or buy stocks and shares at the cheapest possible time or at the cheapest possible price to in order for you to make the most profit. Now, both is not necessarily true. Let's talk about the money for a second. Okay, so money is all relative. Okay, what you have to care about and what you should be caring about is the percentage return that you're making. If you, for example, invest £100 and some other guy who invests £100,000 at the exact same time, and you both make a 10% return, that's, you know, that's fine. You both had made the same percentage return, and that's the main thing. Obviously, the guy with £100,000 made a lot more money than you have, but you've only invested £100 compared to his 100,000. So you have to remember that, you know, money is all relative. And for example, if you were to invest $1,000, for example, $1,000 or £1,000 in Amazon stock 10 years ago, it will be worth roughly $23,000 today. Okay, so 10 years later, $23,000. I mean, what would you be doing with your $1,000 or £1,000 back then? You know, buying Gucci shoes, you know, going on a cheap holiday. I mean, come on, it doesn't matter how much money you put in. Now, regarding the second thing about timing the market, now it's more important to be in the market as long as possible rather than trying to time the market. It's a very important concept. In fact, studies have shown that those who invest consistently over a long period of time, buy and hold within the stock market, actually have a higher success of making a profit than those who try to time the market. So those who try and, you know, figure out the right time to buy that stock and then sell it when they make a bit of profit, and then buy again and sell again, buy and sell, essentially trading. Okay, so studies have shown there's so much more success in doing it the long-term, consistent way of buying and holding versus just trading. So if you guys are able to put more money in, even if it's like 20, 30 quid every single month, or, you know, every year, maybe put in £100, it doesn't really matter. If you're able to put more and more money in, buy and hold, build your portfolio up, then you will actually become a lot more successful in the long run, because you'll be taking advantage of compounding, okay, which is very important, very powerful, and dollar or pound cost averaging. Okay, both of these things will help you grow your portfolio and grow your returns over a long time. So guys, that's it. That's how I would invest £100, and I hope you guys find it useful. The next video we'll talk about how to invest £1,000. So stay tuned guys, check out that video. See you guys next time.